Hey there, and welcome back to our weekly Market Insight series brought to you by the Capital Markets Trading Desk here at SunWest Mortgage Company. Let's get right to it. All right, markets were relatively quiet at the start of the week as investors kept a close eye on the trade negotiations between the U.S. and China. On Tuesday, the world's two largest economies ended 2 days of trade talks with a tentative plan where China would approve the exports of rare earth minerals, while the U.S. would roll back restrictions on the sale of advanced technology to China. Treasuries rallied midweek after the latest price index readings provided signs of cooling inflation. The soft data has traders pricing in 2 rate cuts from the Federal Reserve before the end of this year. The consumer price index rose 0.1% in May from April, less than the 0.2% estimate from economists, and putting the annual inflation rate at 2.4%. Core CPI, the preferred gauge by the Federal Reserve, also came in softer than forecast after increasing by 0.1% month to month, while growing by 2.8% annually. While there were some tariff-related increases, continued weakness in energy prices helped offset these. The May Producer Price Index data also confirming the ongoing slowdown for both the general and core readings. Headline PPI rose a modest 0.1% after contracting by 0.2% in April, marking a significant shift from the previous deflationary trend. On a year-over-year basis, PPI increased 2.6%, matching expectations. Core PPI also rose by 0.1% for the month, while climbing 3% annually. According to the latest analysts from the World Bank, global economic growth is on track for its weakest decade since the 1960s, largely due to recent trade conflicts. The development lender has lowered its 2025 growth forecast to 2.3%, down from 2.7% projected in January. This pace would mark the slowest annual growth in 17 years, excluding the recessions of 2009 and 2020. The World Bank also warned that global growth during the first 7 years of this decade is expected to average 2.5%, the slowest rate since the 1960s. After surging in March and April, consumer worries over future price increases eased in May, pushing inflation expectations down by the largest margin since 2023. In the latest New York Federal Reserve survey, consumers expect prices to increase by 3.2% in the year ahead, a 0.4% drop from April. Consumers also saw inflation falling in 3 years from 3.2% to 3% and from 2.7% to 2.6% in 5 years. The decline in inflation expectations mirrors similar sentiment in other consumer surveys, which have improved as trade negotiations continue to move forward. The NFIB Small Business Optimism Index improved in May for the first time this year. The reading climbed by 3 points to 98.8, surpassing the 95.9 forecast by analysts and slightly above the 51-year average of 98. The rebound in the headline number follows one of the longest stretches of declines in the last decade. 7 of the survey's 10 components improved, as the net share of business owners expecting increased capital, a better economy, and higher sales rose during the month. Nevertheless, the uncertainty index rose by 2 points from April to 94. Taxes ranked as the single most important problem in the survey after rising by 2 points from April to 18%. It was the first time since the end of 2020 in which taxes ranked as the most important problem. Despite mortgage rates still hovering around 7%, U.S. mortgage applications rebounded last week. MBA mortgage applications jumped by 12.5% during the week ending on June 6. Purchase contracts climbed by 10% from the previous week and were up by 20% annually. Refinance activity increased by 16% week to week and was 20% higher when compared to the same week last year. According to Realtor.com, the supply of homes for sale is now 31% higher than at this time last year, while prices are beginning to ease. The first of borrowing activity came even as the average contract rate on a fixed 30-year mortgage ticked up to 6.9% during the span. The number of Americans filing new applications for unemployment benefits held at elevated levels after remaining unchanged for the previous week. Initial jobless claims held steady at 248,000 for the week ending June 7th, matching the previous week's spike. Meanwhile, continuing claims rose to the highest since the end of 2021. Recurring applications surged by 54,000 to 1.9 million in the week ending May 31st. The spike in recurring claims may indicate a slowdown in hiring, suggesting that out of work people are struggling to find employment. And well, ladies and gents, that's it for the week. As always, stay locked in so you stay current on market news. Also, if you like this video, please hit that like button, share, and subscribe. Hit that notification bell so you know when we upload a new video. My hope is to always keep you in the know of the latest world news and, of course, our pricing incentives. Have a great Friday today and an even better weekend, everyone. Buffy out.